I am an investor in AMD, and I think
Hello,
Antonio does a really good job in overviewing companies. So let's check this video out.
everyone, and welcome back to the world's best investing podcast. As AMD continues to succeed, there are lots of highly idiotic opinions, which are second and third derivative takes of these deals that AMD is closing, like the one AMD just closed today, 50,000 AI chips to be deployed for Oracle Cloud Infrastructure. There's so many takes which are essentially the product of not understanding AMD's platform. Similar, there are actually instances of the opinions we were seeing a year ago, or say as far as recently as in April. These are people that are looking at the stock and the company at face value. So one that I heard recently is this is a bet the farm moment for AMD and Lisa Su. That's why Lisa Su gives OpenAI a big share of the company. It's absolutely not true. It's a fundamental misunderstanding of how AMD creates value. And this is something that I think is going to happen. It depends on how the next earnings report is going to go, but I think there's a lot of investors that are actually going to fumble this pick if they did buy at the lows or whatever, maybe a long time ago, because you see people trying to understand the whole AI thing, and they just don't get it. So AI is not different to any other business. It's all about delivering value to end customers in a way that's increasingly harder to replicate while printing cash. So with AI, I posted a graph yesterday in which I showed the adoption of OpenAI relative to the internet years after being launched. So it took the internet 10 years to get to where OpenAI with ChatGPT is at today after just a few years. And so I heard some very relative analysis like, well, it doesn't count because people now have much more access to the internet than they did back then. That is not the point. That is the path to making zero money, as has been looking at chips face to face and saying Nvidia's is still better than this one. That's how you miss investments. That's how you make zero money in the stock market. It's not about relative analysis. It's not about internet access is better and more plentiful now, and therefore we should discount the rapid progress that AI is making. It's about how much incremental value are you delivering to end customers, and are you doing so profitably? So you have two main markets here, which is one, commercial AI use, which is end customers using ChatGPT and other AI-powered applications, and then you have enterprise. As far as I can see, commercial is just rocketing up. ChatGPT is very useful. It's essentially a new species of digital technology. It's almost like a new being in this world, and people are willing to pay for premium subscriptions because it's valuable. Really that simple. On the commercial side, we have all these companies mentioning Palantir in the earnings call transcripts, calls saying, hey, this thing is magical. This thing that used to take us 5 years, now we can do it in 1 week. It's value delivered to customers per dollar spent. That is skyrocketing at the moment. So if you believe that this that we are seeing now, these deals, is a bet the farm moment for AMD, you have no idea about what you're talking about. You basically don't understand that AI is firstly about delivering value to and value to the customers, and how AMD's platform fits into that. I've said many times that AMD is now the machine that prints personalized chips at a marginal cost. Each workload is going to require a specific chip configuration that optimizes value delivered to customers for a total cost. And so if you can do that, you can tactically make your way into markets. We've seen AMD tactically making its way into the inference market recently because they are able to add more memory on chip than competitors. That is fundamentally why you see Oracle leaning hard into AMD's chips now. Again, much of the reaction today that I was seeing was, well, this is just Oracle wanting to lean away and cut the dependence from NVIDIA. Obviously, they're not stupid. They want to do that, but they're not going to be buying 50,000 chips if they don't think that's actually giving them an advantage in what is actually a cutthroat winner-takes-all race, right? So you got to be very, very stupid to be paying attention to the second and third derivative analysis. And it just shows. I mean, if you want to make money in the stock market, you have to be focused on value creation processes that are defensible, that accelerate over time. That is ultimately how a company increases the top line, increases margins, and ultimately drives free cash flow per share gains with stock prices tracking along. So if you start getting mixed up with AI labels, chips, data centers, and these terms somewhat distract you from the actual value creation processes, you're going to make absolutely zero money. You guys know I'm not your financial advisor, but I like to share thoughts on how I navigate narratives, because the market is constantly producing new narratives, taking stocks up, taking stocks down. We know that growth stocks like to go up 50% for no reason in a year and then decline 50% repeatedly for no year. But over the long term, stock prices simply track free cash flow per share. So if you look at AMD, why do I think that free cash flow per share is going up? Well, these guys have been doing chiplets for a decade. Chiplets is what enables AMD to interconnect compute engines at will, so to essentially create personalized configurations which give customers a total cost of ownership for specific workloads in a way that's just hard to replicate. I don't think people at Broadcom or Nvidia are not smart. These are some of the smartest people on the planet, but you have those kind of brains in AMD too. And so what AMD has now is essentially a process mode. You just have to go through the same motions as them to get as good at chiplets. So you will remember that 2 or 3 years ago, the analysis by people looking at these things at face value instead of not putting them into context in what's actually a dynamic environment, they were saying, well, AMD's chips are actually not a match for NVIDIA at the hardware level, let alone the software level. But people were focused on the hardware and they were saying, look at the specs, look at them side to side. They're no competition. That is what you call the innovator's dilemma, where you have a piece of tech that seems like a silly little toy at the beginning, but it's actually cheaper and it's fundamentally different in how it delivers value. And so the company in question is able to iterate on that platform and over time exceed even the performance of the incumbent technology and do so at a much lower price point. So that's actually what you have now. That is why you have Oracle buying 50,000 AI chips. You don't just do that to, I don't know, distract the other provider that you have. I mean, if you do that, you're going to upset the other one. And so it's the dynamics that are not crystal clear or anything. You do that because you're ultimately in an AI race and you are pursuing a total cost of ownership for you. And you're basically trying to maximize value delivered per dollar spent to your end customers. In this case, the customers of Oracle Cloud Interface. So going forward, it's going to be very messy. We've seen it with the many theses that I've covered here publicly with you guys. I've only been doing this for a while on YouTube, but you guys know that on X, I've been doing it for years now, and Substack and stuff. It's whenever you pursue a thesis, there's always going to be lots of opinions. A lot of these opinions actually come from incentives that are not fundamentally aligned with you. So a lot of these opinions come from people that actually just take fees from capital that they manage. And it's managed in a way that it actually doesn't optimize long-term returns. You as a private investor, and ideally as a fund manager too, what you want to do is optimize long-term returns. You really have to be focused on value creation processes. I can't stress this enough. A lot of the people that participate in the financial system are not focused on that. They own stocks as if they were pieces of paper, but they're actually slices of a company. And so if the company increases its earning power 100x, depending on how much of that is discounted in the stock price, roughly the value of your shares is going to go up 100x. Now that doesn't happen quickly. It takes years. As you've seen, I wrote my my original AMD deep dive, having held this company for a bunch of years back in 2022. So the ideas that I laid out there, everyone was saying, well, this is so stupid. You're crazy. You're not even a chip expert, etc. And then if you go back and look at what I said, that's exactly what's materializing. I get stuff wrong here and there, but the thing is, it's not about not getting anything wrong. You guys know I've made mistakes and I've talked about them publicly. It's about how right are you when you get it right. And so here, I think AMD shareholders have gotten it very right. It's been a relatively long year of negative narratives. And what's happening now is so counterintuitive for the human mind that the market just is not going to be able to help producing narratives which distort, sort of confuse people when it comes to analyzing the value creation processes. So if we do agree that AMD has a platform that prints personalized chips at a marginal cost, and then on the other end of it, you have exponential demand for compute, then the equation roughly is going to work out. I think we're going to see a considerable increase in free cash flow per share over the next 5 years. And then in 5 years' time, I'll have to evaluate the competitive landscape again and see what decisions AMD management is taking to sort of reevaluate the thesis. But it's basically all about value delivered to end customers. And there's one fundamental thing adding on top of that, which most investors still do not understand, which is that the moat of the 21st century is actually proprietary data. So increasingly, the economy is about gathering more and higher quality data than anyone else, and then training an AI which automates intelligence and tasks better than any other company can. So if you have a proprietary data moat, you have much of the competitive dynamic in your industry under control. So what does this mean? It means that people are going to be rushing to, first of all, generate this data, store it, and then use it to train AI models. If you think, again, going back to the idea of value delivered to end customers, if you think about what AI can conceivably do for you now as a commercial customer, so as a private user of this thing, or as an enterprise, and what percentage of end customers and enterprises worldwide have embraced this thing already, it's 0%. So again, taking a further step back, if you guys just recall what happened in the year 2021, everyone was convinced that we were going to go and live in the metaverse. People were buying land in the metaverse next to Travis Scott and stuff like that and paying millions for that. I'm not saying that's not going to go anywhere in the future and stuff, but I'm saying people really lost their minds of this metaverse thing. And so the AI equivalent of that we haven't seen. What we've seen for now, and you guys can go and check this on any platform that shows you the numbers and stuff, what we are seeing is, for the most part, stocks tracking free cash flow per share. And if you look at that, for Palantir, NVIDIA is actually quite cheap, but you sort of see the same kind of dynamic. AMD specifically, trading at around 9 times sales, with essentially a monopoly on personalized chips, and this massive tactical advantage to pounce on any workload as it emerges, as evidenced, by the way, with the success they're having right now with inference. You're not really seeing a bubble yet. You're not seeing people make stupid assumptions about where AI is headed. AI is obviously different to what we saw with the internet in that the value it's delivering right now is tremendous. That's really all that matters. Relative analysis don't matter. and all these things that people are talking about do not matter. It's how much value you're delivering to end customers. Qualitatively, in terms of the value that's being delivered, this is like nothing we've seen. And so far, as we add more parameters to these models, they're delivering exponentially more value. So what do I think the bubble will look like? I think it'll be something like, say when maybe the average person in a developed nation has one or two humanoids, and they sort of figure out that they don't have to work ever again because they can just send their humanoid to work or something like that. And then that reality comes crumbling down. That's the sort of delusion qualitatively that you see when you're living in a bubble, as was the case in 2021. We'll see more of these bubbles emerge quicker and then pop quicker just because value creation processes are accelerating. So it's not like, I guess we could see that if we do go back to medieval times, but it's not like in the 1920s, 1930s, where it took some time for the economy to pick up again. If you read the US's history, it's sometimes policies were good, sometimes they weren't. But really, the economy has grown with a one-to-one correlation to innovation platforms. So what you have now is just a massive one. And you don't have that form of delusion just yet. And with AMD, what you have is a platform that's very clear to me. It's, by the way, not very clear, apparently, to many analysts out there because no one has actually mentioned this. But it's essentially, you're going to have lots of new AI workloads emerge. They're going to require specific chip configurations, and AMD's platform is uniquely suited for them to just print chips for people that yield a total cost of ownership advantage. So I think it was yesterday or 2 days ago or something, a paper came out from MIT, which demonstrated an LLM which was able to update its own weights in its parameters, right? So I've made some videos explaining neural networks, but basically this is a neural net that's able to tweak itself, and it works and stuff. I'm not saying that's going to be an avenue which the industry is going to compound on now and it's going to become huge. It seems fairly likely though. And if you think about it, if you have a neural net updating its own weights, that's going to be a new AI scaling law. Probably as you add more parameters, it's to the component of the net that enables it to train itself and optimize itself. You're gonna have a neural network that's increasingly able to tweak itself. If you think in terms of the fundamental requirements of that sort of workload, it's going to require quite a bit of memory. Fundamentally, just because of one thing, there's other things that come to mind, but just one, you're going to have to be able to roll back to previous configurations of the parameters, for example. So that's going to require a lot of memory on chip. And it's probably going to require that memory to be fairly versatile, go back and forth in between versions of the parameters. I can already see how AMD's platform would be quite well suited for a configuration of that sort. So if you go to the press release for the Oracle and AMD deal, it was Karen Batta, Senior Vice President of Oracle Cloud Infrastructure. I hope I pronounced that well. I'm sorry if I didn't. He says, we feel like customers are going to take up AMD very, very well, especially in the inferencing space. If they did just buy these chips to gain some leverage on NVIDIA, there's no need for Mr. Batta to be saying this. And I don't think he's saying it for any of that. I generally understand how AMD's platform gives them a tactical advantage in the inference space. So what I think is happening here is just a continuation of value creation processes, lots of second and third derivative opinions, which in my opinion are actually just designed to help people keep their jobs or acquire new jobs that they're looking for. But those sort of opinions are not actually correlated with value creation processes that drive increased free cash flow per share over the long term. So AMD has barely reacted to the news today because there's this whole sort of skepticism regarding is this party going to have the money to pay this other one and vice versa, and why is this kind of looking circular? I understand all of that, but in the end, it's a business like any other. It's just about delivering value. And as I've said many times, personally, I'm getting a lot of value from AI tools. Whatever you give me of additional AI capacity, I'm just going to pay for it. Eventually, I'm sure I'm going to have quite a large AI bill every month, but at the moment, it's actually sparing me from hiring a bunch of employees, which then would give me a lot of trouble, with the whole social security system and all of those laws that make it increasingly impossible to hire people and build a sustainable business. I think this is a qualitative leap in how we create value and stuff. And I don't think people are very much connected with the value creation processes. And it's because the knee-jerk reaction is to say, well, stock prices are going up very quick. Some, by the way, not all of them. The knee-jerk reaction is say this is a bubble. However, knee-jerk reactions, we know, never enable you to make money. The way you make money is focusing on value creation processes and understanding whether they are improving or not, positioned to accelerate meaningfully, and to what extent this is discounted or not. Right. So I think everything is very much in place for AMD to do very well over the next 5 years. I'm quite convinced about the moat of the platform. I see the end applications. This thing about the new workload emerging, so self-tweaking LLMs, I think is going to be very interesting to watch. I've been talking about some time about this hypothetically new workload that was going to emerge, that we were going to see AMD pounce on very quickly and dominate, thanks to this nimble, versatile quality of the platform. And I wouldn't be surprised that it would be this one. But I guess we'll have to keep a close eye on that. Anyways, guys, thank you very much for joining me today. As always, if you enjoyed this update, could you please share this with one friend? These deep dives and updates are for free, and the only way this grows is with your help. So thank you very much in advance. Thank you for your comments. Thank you for subscribing. Take care and see you next time.
Yeah, that was really good. That was a really good summary by Antonio.
Ever
I
wondered
think
what
he
happens
kind
when
of
legs
talked
like
about a
these
little
almost
bit, talked a little bit about the whole thing around the chiplets, and I think that is, you know, it's going to be their best business. Um, Having this chiplet architecture is going to be, um, especially for inference, especially for smaller companies that cannot afford a NVIDIA's really expensive ROCm program. Um, NVIDIA's chips, they're going to be able to go with chips like AMD for mid to small businesses that want to have AI capabilities. So I think that was a pretty good interview, pretty good review of AMD as a company. Um, it looks like the this is Token 2025, where um, Tom Lee participated in. But all that to say, I think still I've been buying AMD for quite a while now, and I do have quite a significant amount of AMD shares. Um, I think this company is just getting started. I think it's on the second footing now that we've had a very intense AI training uh, part of the whole AI discovery that's occurred. I think the second part is the inference, and the inference is where a lot of um, AMD's next business strategy is.